Welcome back to Mindful Investing. Today I have some important portfolio updates to share with you. Some moves I recently made based on market conditions, my long-term investing strategy, and will also review the companies which reported their earnings last week and analyze if they still fit in my portfolio or not. Before we dive in, if you are enjoying these updates, it would mean a lot if you can like the video, leave a comment and subscribe. It really helps grow the channel and keeps me motivated to share more with you every week. Thank you so much for being part of this journey. And as I mentioned in the last video, markets have been up for 3 straight days now. And with this bounce, I took the opportunity to trim a position that isn't part of my high conviction holdings. And that stock is Snowflake, ticker symbol SNOW. I sold it for a very small profit, and let me walk you through exactly why. I really like the company and I do believe both short term and long term it could rally nicely, even possibly climbing back to $190 soon. However, Snow currently has a negative EPS, and for my prediction model, positive earnings are crucial when projecting price targets. Because of that, even though it's a strong business, I decided to step aside, at least for now. And next week, I plan to sell CRM and Hershey's as well. First, let's look into CRM. Based on my prediction model, the 1 year and 5 year expected returns are 13% and 83% respectively. Now, technically, CRM does look very strong. I believe it can crawl back toward $313 relatively soon. But for my strategy, the growth potential is not exciting enough compared to other opportunities I'm seeing right now. For Hershey's, things look even less attractive. My model predicts only about 5% upside in over 1 year and around 25% over 5 years. Plus, I believe Hershey's is about to face serious headwinds. The new tariff policies and raising cocoa prices could hurt margins significantly. Many analysts are also starting to project slower growth for Hershey's. So for me, it's important to protect my gains here. I'm not just chasing dividends. I want strong total returns over time. So here's my plan with the cash I'm freeing up. I'm planning to reinvest these into TSMC, Shopify and Hims and Hers, the ticker symbol HIMS. Now I've already covered TSM in my prediction series, and let me tell you, I truly believe Shopify and Hims are future growth monsters. Even though I haven't covered Shopify and Hims yet on the channel, their fundamentals are incredibly solid and the growth projections are very exciting. I'll be breaking their business model in upcoming videos, so stay tuned. Also on the passive income side, I've been selling puts on very safe, far out of the money strike prices. In the last month alone, I earned $416 in premiums. It's not a huge amount yet, but remember, this builds over time. And the beauty is, if I get assigned, I'm totally fine owning the stocks at better prices. Alright, now let's shift gears and talk about earnings. 4 companies in my portfolio reported this week, and I want to quickly walk you through how they performed, my updated predictions, and my plans for each. Starting with Vertiv Holdings, Vertiv reported adjusted earnings of 64 cents per share, beating the consensus of 61 cents. Revenue came in at $2.04 billion, which also beat expectations of $1.94 billion. The company raised its 2025 net sales forecast by $250 million, citing strong demand linked to artificial intelligence. They also mentioned they are actively managing tariff risks through supply chain strategies and production flexibility. The stock jumped 25% after earnings, and my personal position is also now up close to 3%. After updating my model, the growth rate slightly adjusted from 27.4% to 27.2%. Still an incredibly strong growth story. I will continue holding Vertiv with high confidence. The next one is Lam Research. For its third fiscal quarter, Lam posted adjusted earnings of $1.04 per share, beating expectations of $1. Revenue rose to $4.72 billion, topping Wall Street's forecast of $4.64 billion and marking an increase from last year's $3.79 billion. Management gave a positive outlook for the next quarter, expecting earnings between $1.10 and $1.30 per share, with revenue projected between $4.7 and $5.3 billion. The CEO highlighted strong market share gains, especially in South Korea and Taiwan, even as the company navigates export controls affecting China. My position is still down around 4%, but I'm optimistic. I updated Lam's growth rate in my model from 16.4% to 17.7%, and I believe the company is positioned for strong future returns. I will continue to hold Lam Research. Moving on to Chipotle Mexican Grill, Chipotle reported first quarter adjusted earnings of 29 cents per diluted share, up from 27 cents a year earlier. Revenue rose to $2.88 billion from $2.7 billion last year. Even though the earnings were softer, the company issued strong guidance and many analysts upgraded their ratings and price targets. Currently, I'm down about 7% on my Chipotle position. After updating my model, I adjusted the growth rate slightly down from 20.2% to 18.1%. However, I expect this growth rate to climb back about 20% as the company aggressively opens new stores. I'm confident in holding Chipotle for the long term, and I continue to expect strong returns. Finally, let's talk about Alphabet. Alphabet reported first quarter net income of $2.81 per diluted share, up from $1.89 a year ago. Revenue was $90.23 billion, beating analyst expectations of $89.17 billion. Alphabet also announced a 5% dividend increase and authorized a $70 billion share buyback program. The stock briefly popped to $170 after earnings but settled around $165. I'm slightly green on my position now. That said, I updated my growth estimate from 15.6% to 15.1%. Under my model, this lowers the projected returns to just above 100% over the next 5 years, which does not meet my 200% return threshold. I plan to reevaluate whether to continue holding Alphabet long term after watching a few more quarters of performance. If you want to see how I'm structuring my investments, I've linked my 4 ETF portfolio and my full stock portfolio in the description below. Make sure to check those out. Thanks for watching and supporting this channel. Don't forget to like, subscribe, and follow Mindful Investing for more updates on how I'm navigating this market carefully but confidently. I'll see you in the next video. Stay patient, stay smart, and stay invested.